Well, so glad you could join us, and thanks for allowing us to be a part of your day here on a Tuesday, a Crop Progress Tuesday. I'm Marlon Bowling with you, and we are going to go to the trading floor in Chicago and get some expert analysis on what we're seeing take place here in the day's trade. We have Todd Bubba Horwitz, BubbaTrading.com, standing by. He joins us right now, live and direct from the trading floor. A couple of things I wanted to point out to some folks here before we get into our market talk here, Todd, if you don't mind. Winter wheat harvest progress. We had all kinds of data came out from USDA yesterday. Here's a look at the winter wheat. Let's take a look at the harvest, if we could. The harvest progress, that is. Now, nationally, we had 28% harvested versus a 5-year average of 25%. The leader of the pack right now is Arkansas, 88% done. Oklahoma is 77%, Texas 74%, and Illinois 65%. That big wheat crop of Kansas is now 22% done. They made 18%. Or 18 percentage points of progress last week alone. They're almost back up to their average pace. I wanted to point out the spring wheat condition. If you look at the major spring wheat producing states, we had North Dakota going down 1 point, down to 42%. Montana down 4%, Minnesota down 4%. South Dakota was unchanged at 13%, and Idaho down 11%. Big loss there. And overnight, Todd, we had big gains in the spring wheat trade, but it seems like everything is kind of vaporized here this morning. What happened to the grain trade?
Good morning, Marlon. Well, look, we had a heck of a rally. If you go back and look at Thursday, Friday, and yesterday, you're going to get some profit taking here at some point. You're going to get some sellers, and of course, I think that's what we saw. But we've been able, when I walked up here, to go back to positive territory again. But again, we liked wheat. We thought wheat was the strongest of the bunch, and of course, we're seeing that. But again, you're going to see some sort of profit taking when you get this kind of movement. We went straight up Thursday, Friday, and Monday. So naturally, a little bit of selling is, I think, more than natural right here.
All right, let's look at the corn market. A lot of pressure in this corn and soybean trade here. On the corn, we have July down 3 3/4. It's come off its low now by a couple of pennies. December down 4 1/4 at 3.89. On the soybean trade, we have July now trading at 9.29 1/4, down 8 1/2, and November down 8 3/4 at 9.39 3/4. And then touching on that wheat that we were just discussing in Chicago, July up 1 3/4 now at 4.68 3/4. It's about a nickel or almost 6 cents off of its low from a little bit ago now. And in Kansas City wheat, we have July now a 1.5 lower at 4.71. Go figure. A dime off its high from last night. And then on the spring wheat trade, we now have July 4 higher at 6.43 1/2. It's just anybody's guess here, Todd. It's going all directions this morning.
Well, I think, but if you really look at it closely, Marlon, I think you look at corn, 370 in July happens to be a great level. I think that we look to be buyers here. I think you're going to see much more explosive pricing as we go. I think the big problem in the grain space is going to be soybeans. They failed again, either July 940 or November at 950, and that's a problem. That's a technical problem that is stopping them from going higher. Corn, I'm not at all concerned about. I think we go higher here. I think the soybeans are a problem, and until we can clear 940 July or 950 when July goes off this week, so 950 in November, it's going to be a problem, and I think there's going to be continued pressure on these markets until we get past those levels.
There's a big plunge taking place in the cattle complex, and we'll be back in just a moment, Todd, and we'll talk about that as well right after these messages. Big drops in that crude oil trade. We're talking with Todd Bubba Horwitz of BubbaTrading.com in Chicago, and he's kind of been talking about that for a long, long time, about crude oil getting down in the lower 40s. We're in the 42s now, Todd.
Marlon, I think we go to 40. That was my target. We'll probably go below 40 because I've been looking for 40, but I would not be surprised in the next day or so to see a little bit of a bounce here. This has been a little bit tragically done to the downside, and of course, you've got everybody piling into the shorts of this trade. I would not be at all to see a 4, 5, or 6% pop here, somewhere from down around here, but I do still expect 40. But if you're looking to start to hedge out fuel cost, certainly 43 is okay to start looking at it. Again, you can start to put those costs and associated so you don't have to deal with if we do go back higher.
Should producers be locking in energy needs right here at these levels or not?
I think you could lock in a partial. I would try to wait. I think we're going to get lower prices. I think that the whole picture, the lack of the demand, the oversupply, the lack of growth is going to continue to push prices lower. However, if something changes or we get a big short squeeze, do they want to get trapped having to pay more later? So if you know that you can make money at $43 crude or diesel, then why not lock in what you know you can make money off of and then let it deal from there, and don't do it all, but do portions of it.
So what pulled open that trapdoor into the cattle market today? Well, the past several days, really.
Well, I think we saw some dramatic weakness. We had a very big squeeze, and especially in the fat cattle coming out of April and I think into June. And so now I think this was natural. I mean, we're just about nearing the targets that we were looking for. 113, 114 was what we were looking for here. And I think that's where we're going to go. And then I would start to look to be a buyer. We knew, or we felt, that backwardation formation had to correct itself, and it still hasn't quite done it yet. But we did see some heavy selling. And again, it's every day now. Sellers show up and they're looking to push down, and that's why you always want to make sure when you get these big rallies that you at least protect yourself underneath, just in case these kind of things happen. And of course, feeders looked like that. We targeted about 135 to 138. I think that's where we're going to head. But again, then I'd be looking to be a buyer. I am overall very positive in fats and feeders, but I think that we did need this work done technically, and I think it's now almost completed. And now we can look to see for higher prices. On the futures trade, let's take a closer look. We'll zero in here on the cattle futures. June live cattle down $1.55. August down 177 now at 114.33. Well off its high once again by about $1.50. Now looking at the feeder cattle trade, we have the August contract currently at 141.58. That would be down $3.42. September down 3.46. Meanwhile, in the lean hog trade, well, it has been a different story. July still in kind of a little world of its own. It's 85 higher again at 84.75. Had its high earlier of 84.92, but the August is down 20 now at 81.28, and October down 40 at 68.98. And you actually have a little bigger losses as you go further out in the deferred months. Todd, great to talk with you. Thanks for the insight into the markets. Appreciate it very much. Thanks, Marlon. Have a great day.
All right, Todd. Bubba Horwitz of BubbaTrading.com right there in Chicago.